Hello, everybody, and welcome to the Like a Tortoise channel. In today's video, we will be talking about PayPal, or should I call it PayPal? And I will tell you exactly what I'm doing with my position now in the aftermath of PayPal's earnings reports and conference call. Okay, this has been a nasty quarter, everyone. I wasn't expecting something like that, and of course, who could expect something like that? Because they certainly weren't guiding for such a nasty quarter in the previous quarter. And once I started walking you through the main results, you will see exactly why I'm so bearish right now. Because I mean, it's hard not to be after this disappointing quarter. Okay, you can see across the board that, of course, headlines are tremendously negative. You can see that because they didn't they missed on revenues, they missed on earnings per share. But the most disgraceful thing, in my opinion, was actually the guidance they provided in 2026, and of course the ousting of the CEO, which had only been at the helm of the company since late 2023, and that was Alex Chris. And I think Alex Chris was doing a very good job. But again, the core problem is around branded checkout. And you guys, if you have been following the channel, then you know that this is something that analysts is something that I've been conveying to you, that analysts are very focused on this, and for a good reason. Remember that the branded checkout experience, that, for example, when you check out online, right, you see the PayPal logo. That business segment is what generates most of the profitability, right? Because they don't have to share the revenue with third party providers. And so this segment, which is a key component of the company, is just going under. And the reason it's going under is mostly because of competition. And this is something that we have to pay very attention. We have to pay close attention to. So, guys, I will talk about the most important things from the earnings call in the earnings report and the conference call. I put everything in a Word document. It's usually a PDF, but I didn't even bother doing that because I just wanted to record this video as soon as possible, and it just took me a while to put all of this together. So I will do my best to walk you through the most important things, because I want you guys to understand my thesis. And why am I doing this right here? Because this is something that, if we are going to build a community, we need to share both our successes and weaknesses. Okay, and so I want to be as transparent as possible, because no matter how great your portfolio returns can be over time, you will always have companies that will not live up to your expectations. Okay, and this is why you always want some portfolio diversification in case situation like this do happen to occur, right? I mean, so I run a very concentrated portfolio. It's a high conviction portfolio, but it doesn't mean that all of my companies will perform. I mean, of course not. And I don't need that to happen, right? So you know that you can achieve above average rates or above average returns over time, right? Just by having I don't know, in my case, like 3 or 4 companies achieving outstanding results. Okay, and so this will set the tone for the rest of our call, because I really wanted you guys to understand and I know that many of you have also invested in PayPal, so it's very important for us to understand what exactly happened and what kind of impact this situation can have on our portfolio going forward. Okay, we are investors, we don't have a crystal ball. What we can do is we can try our best to mitigate these mitigate situations like this by, number one, diversifying some of our portfolio holding, diversifying our portfolio holdings, of course, and number two, having a high conviction in all the companies that we are investing in, and always buying with a margin of safety. And this has always worked over time. It's not going to stop working going forward, but it doesn't mean that I'm happy with this quarter. For sure, of course, I'm not happy, especially because I even bought more PayPal around the $50 mark. Okay, but this was completely unexpected. So let me show you exactly what went completely wrong. Right. So let me just take a sip right here. Okay. So the purpose of this document is to help you, viewers and investors. I have no idea what's going on here. Oh my God, can't believe this. Let me just open the right document. Where is it? PayPal? Where is this? Bear with me 1 second. Wait, what's going on here? It's not this document. So where is the document? Ah, right here. Okay. Okay, so let me share my screen. Right. So here we go, everyone. Okay, so PayPal's Q4 earnings were not just a modest miss. They failed to clear even reduced expectations because remember the stock had been selling off sharply, right, in the many weeks leading up to this earnings report. So a lot of negativity was already priced into the company going into this earnings report. But boy, did they manage to surprise everyone. Right, reinforcing concerns that the company's core business is structurally weakening. Revenue and earnings grew only marginally, while margins continue to compress. More importantly, management guided to declining earnings in 2026 despite aggressive share buybacks. The surprise removal of CEO Alex Kreis after barely 2 years added to the sense that the turnaround has actually stalled. So, what is the bottom line for us investors? And this was not just a bad quarter, it was a fundamental confidence shock driven by slowing branded checkout, as I will show you, falling take rates, and shrinking underlying earnings power. This is essential right here, okay? Slowing branded checkout and falling take rates. Let me show you exactly what I mean. If I go to the quarter, if I go to the presentation, yeah, when they released the report, I was like, you know what? I'm just going to go straight to what's really important, and I want to see the take rates. I want to see the branded checkout growth for the quarter, transaction margins, all of those things. And what I saw was just, I mean, look, you can see, for example, that revenue is only grew about 4%, 3% if you account for the forex exchanges, right? Transaction margins at 3%. That this is the year-over-year growth. But then you can see that non-GAAP earnings per share only grew by about 3%. But then look what happened. So let me show you this. This is what's staggering. Monthly active accounts grew 1%. This is not that big a deal. In fact, right here, okay? Yeah, so 1%, it's not that big a deal. So it really didn't concern me that much. But what really concerned me was this here, right here. Look, branded checkout online only grew by 1% in Q4 2025 against 6% in the same quarter last year. Okay, so this is horrible. All right, and look at the branded experience, which include the online experience, right? But also the online when you pay using PayPal, when you use PayPal at a physical store, for example, right? Look at this, only 4% growth versus 8% for the same in the same quarter last year. So this is a sharp decline, and of course, this is exactly what analysts were paying most attention to. In addition, you can see that the take rate, for those of you guys who are new to PayPal, the take rate is also very important because it shows you how much revenue PayPal gets out of every single transaction, right? And you can see, if I go right here, you can see that the transaction take rate, look at this. So the transaction this is what we have. Look at the take rate, right? This is the third, let's show you. This is the fourth quarter 2024. So you can see the take rate was about 1.73%, right? The transaction take rate. And now it declined to 1.65%. So the transaction take rate has been declining, as you can see, right? Achieving a recent low of about 1.64% in quarter 3 2025. There was a slight improvement, but overall you can see the trend continues to go down. I wasn't expecting this to show a meaningful improvement right here, but again, this is another thing that I didn't really like to see. And if I show you this right here, look at the total take rate 1.60. So quarter 4 2024, it was at 1.91%. In quarter 4 2025, we had 1.83%, yeah, which marks the lowest take rate going back several quarters. So I don't like this. I don't like this at all. And this is something that really spooked me as an investor. And I completely understand the massive sell-off that we are seeing right now. Okay, but wait, I mean, we still need to break this down further, and it's not pretty. So let's continue. Headline numbers growth that fails the context test, right? Look at this. So the revenue came in at 8.68 billion. That was 4% year-over-year growth. It was against the $8.79 billion expected, right? So they missed on revenues. Non-GAAP earnings per share of 1.23 also missed the 1.29 expected. So they missed both revenues and non-GAAP earnings PS estimates. Total payment volume, right? It was 475 billion. It was at 9% year over year. But bear in mind that 6% was FX neutral, right? So currency effects. On the surface, PayPal is still growing. There is no doubt about that. It continues to grow, but it's just sluggish growth, right? So this is subpar growth for a global digital payments platform, especially if you compare the growth rates of competitors like, for example, Shopify, right? And they are doing far better than PayPal. But anyway, I knew very well going into before I invested in PayPal, I knew exactly what the headwinds were, what the risks to the investment thesis were. And the reason I invested is because I saw changes under Alex Chris. And I show you many times that margins have been growing, right? For example, operating margins currently sit at the all-time highs. Net margins are also growing under Alex Chris, and they reported still, I mean, record free cash flows. And returns on capital, so the capital allocation metrics from, namely return on invested capital, all of these things have also been trending higher ever since Alex Chris took over, and all of these are the key factors that are very important in a turnaround play. Okay, so earnings PS missed both analysts' expectations and PayPal's own prior guidance. Yeah, and it's not like PayPal's guidance has not been conservative under Alex Chris, because they have been quite conservative, right? So for them to miss, this is a big problem. Non-GAAP operating margins continue to compress, right? Meaning PayPal is spending more to generate each dollar of revenue. Again, the operating margins, if I show you right here, let's go back here. If I look at this nasty sell-off, look at that, 18% decline. Absolutely staggering. Okay? You think that this company couldn't go much lower, given how depressed the stock price has been. But again, just because the stock is cheap, it doesn't mean it cannot become cheaper if the fundamentals deteriorate, right? But you can see, for example, if I go here to the ratios, you can see that, look at that. So under Alex Chris, right? So this thing has been going up, which is good. But if I show you here the margins, let's change this to the trailing 12 months. If I show you here margins, where is the operating margin? Look at that. So yes, it's declined if you go back many years, but since Alex Chris, you can see that it's been going up because they have been focusing on they have been more cost efficient. All right, but that alone does I mean if the business does not grow, there is only so much they can improve in terms of operating margins. Right, they need to grow the business for this to be sustainable. Right. So let's continue. Subpar growth exists, but it's low quality growth at this point, right? So what is the core problem? As I already alluded to, it's the branded checkout. The fact that branded checkout is losing momentum. Branded checkout. This is PayPal's highest margin in most defensive products, right? Is has slowed sharply. Quarter four branded checkout growth was 1%, right? FX neutral, down from 5% growth in quarter two and quarter three. This matters because branded checkout drives pricing power and takes rates. Of course, think about it. If people use more branded experiences, that speaks of a pricing power, right? Because they want PayPal, they trust the brand, they want to see the logo, right? That all comes down to brand reputation. And if people use more the brand checkout experiences, then that means PayPal will be able to charge more as well, right? And so the take rate could go up as a result. But the problem is that this is not happening. And so what happens is pricing power is actually diluting together with take rates that have been declining, right? So it's PayPal's primary moat versus Apple Pay, Google Pay, and native card wallets. Management blamed weak US retail demand, international headwinds, tough comparisons, but the market's conclusion was clearer. PayPal is losing relevance at the point of checkout. And by the way, when the CFO, which is going to, so she blamed all these she blamed macro headwinds, but she also mentioned that they have failed. They were expecting a faster turnaround, but and so they are not executing as they wanted to. So she pointed out to some internal problems as well. All right, which again coincides with the CEO being ousted because the board wants the checkout, the branded checkout segment of the business to start to turn around. And sure enough, if I show you what they say here, look what they say. They say we grew revenue, transaction margins, and earnings per share. This is the earnings report, underscoring the strength of our. This is what Jamie Miller said, right? So at the same time, our execution has not been where it needs to be, particularly in branded checkout. They recognize these problems and they attribute a lot of the issues to macro headwinds, but they also mention that look, they failed to execute, and that's it. Okay, so it's taking longer than they initially projected, and so yeah, in some other issues that all come down to mismanagement as well. All right, so execution. But now let's continue here. Okay, the take rate problem. The moat is eroding. This. Why do I say the moat is eroding? Because if the moat was not eroding, then what happens is the transaction take rates will at the bare minimum stay stable, but they are not really stable. They have been declining. So I can see there is a lot of pressure right here. All right, so the percentage of each transaction PayPal keeps as revenue is declining. The take rate declined 8 basis points year over year, right? In quarter four, in quarter five. Yes, of course, in quarter four, yeah. This continues a multi-year downward trend. Why this is critical? Falling take rate signal loss of pricing power, and I showed you that. So what's concerning to me is that the total take rate continues to decline. It's not even stabilizing, right? So merchants are either negotiating lower fees or shifting volume to lower margin products. This is my conclusion. Because think about it. Under Alex Kreis, one of the things they said they would do is they want to go to the negotiating table, right? So they want to negotiate with current merchants, and they want to understand their problems, and then they want to negotiate like a fair fee. But what I see right here in this report is that they are having to negotiate lower fees in order to keep them using PayPal solutions. All right? And that is not sustainable. Okay? I hope you understand that. So consumers are increasingly using cheaper embedded payment options. For example, if you have an Apple phone, chances are you are using Apple Pay. Until take rates stabilize, PayPal's economics are structurally deteriorating. And this is why I was harsh here, but this is true because we have to assess the thesis we have to strip out our emotions entirely and see the data. And this report was, how is this even possible? That's what the thing that I'm asking because, man, it's only been 3 months. What caused this to deteriorate so much is unbelievable. Branded versus unbranded, right? So the mix is getting worse. PayPal's growth is coming from the wrong places. What do I mean by that? You have branded checkout, right? Which is by far the most important. That only grew 1%. So it's high margin. Unfortunately, it's the one that is not growing at the rates that it should be growing. And then you have the unbranded with Braintree and PSP, payment software provider. This is faster growth, but it's low margin compared to branded checkouts. And then yes, the bright spot is Venmo because Venmo is growing very attractively. But the problem is that at present, Venmo only accounts for 1.7%, 1.7 billion of revenues. So it's too small to offset the core weakness that PayPal is facing right now. Right? And the same goes for all the strategic initiatives that PayPal has been putting out, which are all great. Agentic commerce, buy now, pay later. All of these partnerships are fantastic. However, we don't know how long we will have to wait before these catalysts to actually translate into actual profits, right? Actual revenues, let alone profits. Cool. 2026 guidance. This was the biggest problem in my opinion. So it was very weak. Okay, but now look at this. The Q4 misheard, but 2026 guidance broke the thesis. Q1 2026 mid-single digit EPS declines. GAAP and non-GAAP declines. So forward 2026 GAAP earnings per share mid-single digit decline, right? So you can see this if I go here to the presentation. Let me scroll down where they provide guidance. Where is this? Hold on. Right. So look at this. Transaction forward 2026. No, look, first quarter 2026. So transaction margins, slight decline. Non-GAAP EPS growth, mid-single digit decline. GAAP EPS growth, mid-single digit decline. So what does that tell you? And what is the impact of that? It's not just the fact that PayPal had a terrible quarter. It's the fact that this year is not going to be great either. And so, if you are an investor, you have to consider the opportunity costs. In other words, let me explain what that is. If you are new to this term, it means that if you have an allocation to PayPal and you know that in all likelihood, right, because man, they are transitioning CEOs again, a new CEO will come in. He has been on the board for the last 5 years, so I assume he knows PayPal very well. But still, you have to give him some time to actually to lay out a solid execution plan and for results to start becoming visible, right? And so let's say, and so I assume 2026 is going to be another year of waiting around. And what happens if you see more opportunities in the markets, like better companies, right, that become cheaper, then you will probably sell your PayPal shares and you will rotate capital out of PayPal into these companies. This is what's happening as well. Yeah, and that's why I think we are seeing more selling pressure right now, is because of this guidance. It wasn't just a bad quarter. It's the fact that they don't know what 2020. They are not projecting any meaningful. In fact, let's not even say meaningful. They are not projecting positives in this year. Okay, and so this is it. This is what really caused the stock to crash further, in my opinion. It's the fact that the turnaround is going to take much longer than initial investors, including myself, expected. All right, I wasn't expecting Alex Chris to be sacked. Okay, so Nangapa, Lord Digital Tulikan, crucially, PayPal is buying back. This is another problem, okay? And again, this is because, again, I was expecting PayPal to actually execute well. Um, and I could see in the data that based on margins and returns on capital and reacceleration across some of the metrics, I saw that, so I thought the market was wrong and I was correct. All right, which is why I made the investment and inclusively double down. But the buybacks right now make you think if this has been wise to do buybacks or not, because a company can do buybacks when the stock is cheap. But think about it. They were doing buybacks around $60 per share, right? Or $70 per share. And now the stock is at 40. So the billions of dollars that they invested in the stock, I mean, that money could have been used more productively elsewhere, right? They did so in effect because the stock came down, they destroyed shareholder value, right? Because the shares are now cheaper than they were. Okay, so PayPal is buying back 10% of shares annually. In fact, they have with the current price today at let's have a look here. Look at this. Okay, so the market cap today is around 40 billion. Let's call it 40 billion. Okay, and they have $6 billion, as you can see. They want to allocate around 6 billion to buybacks. Or if you divide 6 into 40, which is the market cap, that means it's about 15% of the market cap. They want to they want to buy back about 15% of the stock, right? And so my point here is, let me go back. If earnings per share is still declining, which is the case, so if think about it, if they are still projecting, despite all the buybacks, if they are still projecting earnings per share to decline, what do you think would happen if they weren't doing buybacks at all? Because buybacks are still financial engineering, right? So what this tells me is that without buybacks, this would have been even nastier than it is at present, right? Underlying net income is falling sharply, which is the case. And we will be able to see that because, and this is why I like to compare net income with earnings per share. I want to see that both these metrics are growing in conjunction. But if net income is decreasing while earnings per share is increasing, what that tells you is that may very well be masking a structural problem because the profitability is declining and the company is resorting to financial engineering just to grow the earnings per share metric, because this is one of the most widely followed metrics, right? They know that. Without buybacks, earnings deterioration would look far worse. That is my point. And then the CEO exited governance red flag. Alex Chris was appointed in late 2023 to reignite innovation, improve execution, restore growth. His removal after 2 years signals the turnaround failed to gain traction. The board lost patience with execution speed. And remember, they know the business more than we do, right? Replacing him with HPO CEO Enrique Lopez. To me, this definitely sends a mixed message. And you can see that that if I go here, you can see that they mentioned, as announced today, the board's appointment of Enrique Lores as PayPal's next president and CEO reflects a clear commitment to strengthening execution, innovation, and results. We are fully aligned on the path forward as PayPal enters its next chapter of growth. What is the main problem I have with that? Is that Alex Chris had a good track record. This was the first year, it was his first year as a CEO, okay? But if you look at his track record while at Intuit, he actually compounded the small business segment of the group. He compounded that at very attractive growth rates, right? So he has like this great track record. This guy, Enrique Lores, he has been the CEO of HP since 2019. So I looked at his track record, right? And look what I found. So Enrique HP stock, right, has gone nowhere since Flores took over. And so if I show you this right here, look at that. He has been, look, he's a Spanish business executive and the CEO of HP Inc. since November 2019. If you look at HP, let's go here to, this is taking longer, and you can see how red this position is right here, right? PayPal, look at that, down sharply, right? So I'm already well in the underwater right here. But let's have a look at HP, and I will show you this. Come on. Right. Let me show you HP. HP Inc. Is this the stock? Yes, it is. Now, let's have a look at what happened since 2019, right? Ever since he joined the company. This is what happened. Look, he joined the company right here. So in 2019, right? In 2019, the stock was at about $18.95 a share. So fast forward to 2026, and the stock is at exactly the same level. So the stock did nothing ever since he joined, and I don't like that. Okay, so I look. It's not to say that he's not going to do very good things at PayPal, but this is not something that I like to see as a shareholder. Ideally, I would like to see a stellar track record, because we know that over the long term, right? And he stayed at EHP for many years. The company follows the company follows the evolution of its intrinsic value, right? So the price follows the evolution of the company's intrinsic value. So if earnings improve over time, then the stock price will eventually catch up. So I don't really like that. Okay. Now let's continue right here. Yes, so the board appears to be shifting from growth recovery to harvest and defend mode, which of course is not aligned with what they described, right? They want to reaccelerate growth, but then I don't understand why they made this a choice here. So look, is there a fix? PayPal is investing in Fastlane, Venmo monetization, agentic commerce, and rewards, but none of these initiatives are yet visible in the numbers. This is the most important thing. Yes, all of these things can be accretive, but that doesn't really matter, because we've been in this position for a while now. And so they have to address their core problem. And their core problem, right, is they can't mask it with financial engineering or partnerships. No. The core problem is branded checkout. And until they manage to turn this segment around, they can't expect investors to feel confident in this stock. So competitive pressure from Apple Pay and Google Pay remains intense. Momentum is negative. In this environment, buybacks may not be the most accretive use of capital. So when they say again in today's call that they will continue with buybacks, honestly, after this report, that doesn't mean nothing to me. In fact, what it means is, you know what? Stop the buybacks, and actually, you have a business to turn around. So use that money more effectively and just try to prioritize where you are facing the most problems, and that is your branded checkout experience, right? It's online branded, but also the both the online and offline segments. Valuation cheap for a reason. Look at $44 pre-market. PayPal is trading at 8 times 2026 earnings per share. That looks cheap, but the reality is that low multiples at this point are only justified if earnings are structurally declining. Um, and without the take rate stabilization, this is not a value stock, it's actually a value trap. So cheap only works if earnings eventually recover. Right now, the trend says otherwise. Final takeaway, PayPal is a case study in how strong brands, massive scale, and large cash flows don't guarantee durability. The company needs to continue to innovate, and they need to address the most important problems, right? And if they don't, if they have a problem to convey that message to shareholders, they don't deserve us to be invested in the stock. Until PayPal reaccelerates branded checkout, stabilizes take rates, and proves earnings can grow without financial engineering, the stock deserves skepticism because it's no longer a turnaround story. It was a turnaround story until this quarter. This quarter, this quarter proves that this is no longer a turnaround story. It's a prove it story. Now, against the backdrop of all these headwinds, we have a new CEO that is joining the company. And so the question right now is, what am I doing with my position? Am I selling it at a loss? Or am I going to wait for and give the chance to the new CEO to actually well, prove me wrong? All right. I criticized his record at HP because I have reasons to do that. But so I don't make any emotional investment decisions. This was a horrible quarter. However, I need to wait and see. I want to see what this guy has in store for his shareholders. All right, and so until I'll give it some time. Okay. Again, he said, what did he say as well? He said something about accelerating the company's core business segments. So I want to see that happening as well. And so until I see that, I'm certainly not buying more shares, but I'm not selling a part of my position either. Okay. If I changed my mind because another opportunity comes in the market and I need to reallocate my investments, right, to reallocate that capital, I will then make you all aware. For now, it's a wait and see approach. That said, look, you understand by my tone that I'm not happy with this quarter, and this was definitely the worst quarter of any company that I've owned over the last several years. So it speaks volumes of how negative I am, because I wasn't expecting this to happen. I wasn't, and neither was any investor. I mean, no, absolutely not. Just compare this quarter to the previous one. Just go back to my previous video on PayPal and you will see the sharp contrast right here. It's like we are talking about a completely different company. So anyway, it's just what it is. Okay, so let me know in the comments below if this helps you, if you are selling your shares, if you are buying more, and what's your take on PayPal situation as a shareholder, assuming you are also invested in the company. In addition, tomorrow, don't forget that so tomorrow, is it tomorrow? No, it's only on Thursday. Evolution, which is another main detractor in our portfolio. I mean, it has been since last several months. They are reporting on Thursday, and so let's see what's going to happen. I know that many of you guys voted. Let's have a look at what you voted once again, because I created a post, right? I asked what you guys thought about the upcoming earnings report on PayPal and the Evolution AB. And at the time, you said, let me have a look right here. Let me go to my channel. All right. And let's see what we have right here. Right, let's go back where it's right here, right? Posts. So let's see. So you said, look at that. We have 19 votes. This was a poll that I put out. And most of you voted. Bear with me 1 second. This is taking a while. Can I see this or what? Come on. Yes. Okay, so most of you voted that both will rise after earnings. And some of you said that Evo will rise, PayPal will crash. So 16% of you may still be spot on. Hopefully, Evolution AB will more than compensate for this crash, but we will see, right? I mean, look. This is fantastic because if you guys are just starting your investment journey and if you think everything is going to be rosy and colorful, you are dead wrong. Things are not gonna be like that, and that's just what it is, guys. And look no further. If you look at Warren Buffett, for example, if you look at Warren Buffett track records, while his track record over the last 70 years has been outstanding, you will see that the majority of his portfolio returns were driven by a handful of companies. And by that, I mean 6 or 7 positions. Okay? And this guy has been around for decades. He's bought many companies over the years, and still, most of his returns were created by just a handful of companies, of big winners. And that's what we need as long-term investors if you just stick with the framework. Don't chase shiny objects, because don't sell your PayPal and go jump straight into NVIDIA. If you are following this channel, just try to be rational, okay? And always use the same margin of safety, because trust me, you will thank me later. Okay, guys, let's see what happens to Evolution on Thursday. Thank you so much for watching the channel, and let's continue to build money over time, and let's continue to be transparent, because I will be sharing my weaknesses and my strengths over the next many videos, of course, because I know that as an investor, it's important to convey its transparency. And I want you guys to feel that from me. I'm not going to hide anything. If a company is underperforming, I will tell you what I like and what I don't like. That's it. Okay? Same thing if the company is doing well, I will be very transparent with you equally. So thank you so much, guys. Have a great rest of your day.